Good afternoon, guys. Welcome to the SBDC here in Springfield, Ohio. Today we're going to talk about the art of leverage, and not just debt. We're going to talk about how you can multiply your resources. At any time, if you have questions during this presentation, don't hesitate to put them down in the chat box. We'll get you an answer today. If we need to follow up, schedule an appointment, we can do that as well. So without any further ado, let's jump right in. Today we're going to talk about not just debt, we're going to talk about how you can multiply your resources. So we're going to focus on some basic ideas that business owners can utilize to take advantage of leverage all around their business. We'll talk about finding the money, but we're also going to spend some time brainstorming how to leverage resources. We're going to walk through a few simple thoughts on what leverage is and how entrepreneurs are uniquely set up to use it. Time's not wasted when it's spent figuring out how you can do a little bit more with a little less and finding ways to leverage things all around you. So let's go ahead and get started with some of the basics on leverage for business and maybe for life. So what is leverage? Well, from school we've learned that leverage can be a force multiplier. It helps us accomplish work. It allows us to lift heavy objects and lift them quite easily. Leverage can also be positive or negative. Now, businesses use leverage all the time. They leverage debt, credit, relationships, skills, employees, expertise, product and marketing differentiation in various ways. In fact, utilizing some forms of leverage is practically built into the DNA of successful entrepreneurs. So generally, let's talk about some of the things that you can leverage. Well, you can leverage someone's time. You can leverage your own time. Time management for a business owner can grow into a skill that can have a huge impact on your quality of life and also how quickly your business can grow. So everyone has 24 hours, so it's an even playing field for the amount of time that we're all given. And now it's up to us personally and professionally to figure out the best way to use this time. One way everyone can expand their use of leverage is to inventory your own existing relationships. It's a good exercise to go through because no matter what industry you work in, there are groups, organizations, associations, Facebook pages, and other ways that you can connect with people inside that industry. So take some time to research what's around you, and you might be surprised what you uncover. You could also belong to a church or a religious network where some members have worked in your industry and could potentially pose as a mentor. Maybe they've owned a small business like yours, and you could potentially benefit from learning how they became successful. Maybe they own another small business, and they could just benefit from your services. Either way, could be a good networking opportunity. You can also begin to use your education network. If you've been to school, you could use it in some new and exciting ways. You could join an alumni association. Reach out to the professors from various schools of the topics that you studied, whether it's business, arts, science, or others. Try to shake the trees to learn what's available. Since you graduated, you may be happy to find out that there's a new technology incubator in your old school that could help out a startup just like yours. You could attend an alumni event or just help get connected to build some relationships. Look at your community. Right here in Springfield, you could take advantage of a lot of cool things happening here locally. Springfield is an amazing place for small businesses, and it's improving all the time. We have an active Chamber of Commerce, Economic Development Department in the city, and we're becoming very business friendly. If you take some time to look around, you'll quickly find out that there are other champions and people excited about what's happening here in town. It's easy to get dialed into this scene if you're interested and could possibly find some additional ways to use some of that leverage of networking in your life. It could make a huge difference. On a smaller scale, we're all part of a neighborhood, and you may be able to learn from the person down the street or become the go-to business on your block, depending on what your industry is. You can also leverage someone's labor, natural talents, right? Use what you're naturally good at if you're the only person working in your business. Or if you have employees, take some time to learn about your associates and employees' natural talents. See if you uncover any new abilities or something that could potentially help your business grow. Also look at underutilized skills. Check the capacity of your business's talent pool. If you do, you'll begin to find out ways that you could potentially grow your business or efficiently expand services, but you'll also be able to seek opportunities to allow your current and future employees to thrive to contribute to your bottom line in new and exciting ways. You can also leverage achievement. You can leverage anyone's achievement who works for you or someone in your network. If anyone's associated with your business who possesses a unique achievement, potentially that could help. Has your business been voted best in something? Or are any of your employees so good at what they do that they've been locally or nationally recognized? You can use these to help leverage and market your business. Now, you can also leverage someone's money. We're going to take a look into this a little bit more in depth later in the presentation, but it's important to mention here to start the brainstorming process to think, where could I get some additional money from? Well, number one, you could go to traditional lending. Banks here locally and nationally are someplace you can go to that you can already leverage maybe a potential relationship with. If you need a few introductions and don't know a banker to talk to locally, we can help with that too. You can look into non-traditional lending. This is a growing space and can be accessed online or in person depending on where you live, and includes nonprofit lending, crowdfunding, and other categories that we'll cover in more detail. You could seek equity. Equity capital for the balance sheet is the sum of money invested by the owners plus the accumulated balance of retained earnings. Chances are you've put some of your own money into your business at one time or another. But you could also potentially take on additional investors that could purchase a portion of your business to help you to continue to grow. It's not appropriate for every business, but it could certainly help you leverage some of the capital that's available out there. So we need to have some goals, right? We need to create a leverage plan not only for your business, but also for life. So talking generally about non-financial and financial leverage, it will eventually become important to assess how you feel about things. An interesting goal for your work and life is to create your own definition of leverage and then plan accordingly. What are you comfortable with? You'll want to figure out the best way to use leverage in your business by taking an inventory of your existing resources and using that information to plan and strategize. Although we're not going to go over that in great detail today, but you can run the exact same exercise in your personal life, and then you can figure out ways that you can help leverage networks and relationships, money and people to help improve there. During that process, don't forget to stay positive and always try to answer the question, what do you want to get out of this? Be forward-looking at all times. Take a view of where you are going and don't dwell on now or how you started. Strategize how you can use leverage to get where you want to be. On this business side, there's been some specific areas that you can investigate. We're going to take a deeper dive into those areas so you can get to know about your business, employees, and consumers better. Some areas to consider when you're taking a deeper dive is a business plan. Business plan is something that if you haven't made one, you can, but if you have made one, now's a good time to take a second look at it. If you have one already, maybe it's been a while since you've opened it up. There's no better time than now to dust it off and make some updates. You can also use this time to consider your competition, how they've evolved over time, and have they done anything better than you, or are you doing something better than your competition? Can you gain any market share from them? When was the last time you really thought about your customer? Are there any new characteristics now compared to when you first acquired them? And can you provide any additional services or benefits to them? What do they want? You need to spend some time to seriously learn about the customers you currently have and how you can grow and gain more of them. Another thing that you can take a look at is your human capital. Now, if you're a business of one, then take a look at yourself. If you have employees, don't forget to take a look at them. Take a look at your human capital to measure how it's being utilized. Think past the last few months and picture a time when things in your business have been running optimally. How would you set things up? What jobs would you ask people to take on? And are there any areas that you could potentially use people for cross-functionality? Is there a part of the business a current employee wants to learn about, and does that make sense to help teach them? The market's been flooded with additional seminars and online workshops that you and your staff can take advantage of, oftentimes for free or little cost, to create and learn new skills. There are apprenticeship and technology classes through the state of Ohio. And does everyone at your business have a clear direction forward? Do they need to be reminded of the big picture and how you can show trust? Certainly, pay rate, benefits, and time off are all linked to job performance. However, according to a survey by the American Psychological Association, feeling valued is a key indicator of job performance. So feeling valued, employees who feel valued are more likely to be engaged in their work and feel satisfied and motivated. When given a new opportunity or a challenge presented to them that they're interested about learning on, they typically perform better. So how can you best create that kind of environment moving forward? We'll also take a look at your business model. Now take some time to think about your current business model, pre-COVID, during COVID, and post-COVID. Is there a way that it could be modified? Keep in mind how any modification to your business model could impact customer service. Also, take time to figure out how you may be able to improve customer service and what flexibilities you have within your current service model. You're also going to need to figure out how willing you are, you and your staff, to make these changes, and you're going to have to weigh the costs and the benefits of their implementation. Marketing. Always good to review marketing. In the marketing arena, you can devote some time to evaluate your current plan as you consider what adjustments you can make and best how to make them. Depending on how you adjust your marketing plan, during this time, you're likely to devote some time to learning new marketing techniques. And this is a great time to look at some secondary market research. If you need help in any of those primary or secondary market research areas, coaches and consultants at the SBDC would be glad to help. Now, much of this research can be found online or at our public libraries. And if you contact us, we'll provide a list of some good resources that one of our partner SBDCs put together. You also want to take a look at your products and services. This is another area that's important to look at because the products and services you offer define your business. You want to make sure that you have a clear picture of what you offer and how that sets you apart from your competition. What makes customers choose you and your business over another one? How can you maximize this advantage? Is there room to be flexible with your product or service? Are these changes for the short term or are they more long term? What trends do you see now in the marketplace and what can you possibly anticipate in the future? Is there anything that you can begin today to plan for the long term and start in the short term to help grow your business? A couple other things that you're going to want to consider, and it's very key to finding and actually obtaining money. Cash flow analysis and cost analysis. On the financial side, these are two important areas, cash and costs. On the cash side, you've heard it's king, it's true, and it always will be. Look at ways to improve your cash management and benefit your business, especially at times like these. Taking time to learn some of the tips, tricks, and how you can implement better cash management techniques could have long-term benefits for your organization. Now could be a good time to investigate a new pricing strategy. See if there's any room for change. See if your pricing is accurate. See if it's what the market's willing to bear. Should you charge more? Should you potentially charge less? Should your pricing be higher or lower? On the cost side, developing a strategy to guide you through good markets and bad markets is key to help your business weather times of uncertainty. It's also important to take a look at your vending relationships from a holistic perspective. Are you getting good prices? Do you have a backup? Is this vendor one that helps your company actually build credit so at a time when you do want to go seek money, you'll have a credit history of reliable payments? Do they report your on-time payments to credit bureaus that monitor business credit? During this time, many creditors potentially are working with their clients to find flexible solutions. Before taking advantage of any type of new flexible solution, you need to understand any long-term potential issues that could arise from any modifications or new vendor relationships. Either way, it's always important when you're talking about costs to learn about some of the options available to keep your costs down. Also investigate ways you can cut costs if necessary as needed. So, to talk about some of the things that you need to think about before you start to use financial leverage. Number one, you must buy an asset. To use financial leverage properly, you have to buy an asset. An asset is something containing economic value now or future benefit. Typically, it generates cash flow in the future, such as machinery, maybe a financial instrument, or a patent. In business, assets are listed on the balance sheet and netted against liabilities and equity. Let's say you want to purchase some awesome new television, and you purchase it on credit for your business. Now, it does have value, but is that an asset? Is that actually creating money or wealth for your business? Something to think about. You have to do your research when you're thinking about things, if it's an asset or potential liability, and make sure that you're targeting to generate income. The key when borrowing money is to pay for an asset that actually pays for itself and then some. If you're buying an asset that doesn't generate revenue, directly or indirectly, should you do it? Well, every situation is different, so if you're unsure about a large purchase or what can be considered an asset, follow up with us at the SBDC. Let's go through a brief example of using financial leverage in the industry. ABC Inc. and XYZ Inc. are two companies operating in the same industry. Things are going well and they're both looking to expand. One decides to not use leverage and pays $200,000 cash to purchase a new facility. XYZ Inc. decides to use leverage and leverages $200,000 with a bank's $800,000 to purchase a new facility. They both believe the new facility will increase revenue. In this case, XYZ is actually using leverage. They control a $1 million asset with $200,000. Now, their earnings grow, and as the earnings grow, they're able to cover the cost of paying back the loan. Both companies thought that they were an expanding market, and as it turns out, market values rise 10% in 1 year. So, if the value rises 10% in 1 year for both companies, ABC Inc. could sell their new facility for $220,000, which is a 20% gain. XYZ Inc. can sell their $1 million facility for $1.1 million, which is a 69% gain of $90,000. Now, that's after the deduction of paying back the $1 million owed on the property and then spending $10,000 for 1 year of loan interest payments. Keep in mind that risk can also work the opposite way, or leverage can work the opposite way. The value of both facilities, when they didn't sell, falls by 10%. So in the hypothetical sale of a building, ABC Inc. loses 10% of its investment, which is only $20,000. But XYZ Inc. loses 50% of its investment, $100,000, because it leveraged up to the million. So keep a couple things in mind when you're thinking about leverage. More leverage means more risk. It's important to keep that in mind as you personally evaluate your comfort level with risk. Some people are completely risk adverse, and that's okay. If it's a deal that you're going to lose sleep over, chances are you shouldn't take it. Also consider what you believe is a big risk now could change in the future. Setting your own parameters around the risk size and exposure can help you guide your business, but always remember that no matter the size of the risk, you should try to estimate various outcomes. When you set aside time to calculate risk with a business partner or professional, you're not only setting up your business for success, but you may also sleep a little easier too. Now, it's important to know that some risks won't pay off. It's important to embrace that. Not going to win all the time. It happens to every successful business owner. Also, whenever possible, control bias. Keep in mind that we typically skew the perception of risk. For whatever reason, it's natural for many people to exaggerate the possibility of failure, and as a result, we also exaggerate the consequences of that failure. To learn how to use financial leverage well, you'll need to control this worst-case scenario outlook. Don't ignore it. But learn to control it and anticipate it. Use it as fuel to build a strong and resilient business. Are we able to predict everything that's going to happen? No. No one really could have predicted the situation that we've just been through with COVID, but we can use what we've been through with COVID to help us prepare for the future. You're going to have to balance safety and growth potential, right? As we mentioned, each situation is different. So there's a different amount of leverage for each person. Depending on where you are in life, Your best answer on debt might be a payment that you can comfortably afford. In another season of life, maybe the payment could be more of a stretch. Knowing you're working towards a goal and properly evaluating all the risks involved, maybe you're ready to grow. Now, there are industry norms, and we can see that as the cost to borrow money goes down, the amount of debt people and businesses start to take out goes up. It's a fluid situation for many businesses, but remember this: proper debt management can result in huge savings to a borrower or a business owner who takes an active role over time. It can save you hundreds of thousands of dollars. It could save you tens of thousands of dollars. It could save you just thousands of dollars. It can save you money. Proper debt management is something that, if you learn to do, can save you on a personal level and on a business level. It's a position that can change over time, so it's important to monitor it. Do you want to invest in someone else? Really? I mean, is there any better investment than you? I don't know. Maybe you're a big risk, or maybe you can't be trusted to show up for work every day. But that's likely not the case in your business. It's your business. But only you can answer that if you're a good investment or not. A couple other things that you're going to want to think about and be able to answer the questions to are, hey, what's the expected return on this invested capital, right? The expected return, I mean, that sounds important, right? What will buying a new piece of equipment do for your business? Can you project how it's going to increase sales or maybe increase productivity? What if things don't go well? Could you estimate a return at 50 or 25% capacity after buying that new machine? Yeah, you could figure out how much it could impact your business positively or negatively, depending on production, if you went through a few exercises of projecting. Is it still worth doing the deal? How long could you sustain to run your business at such a diminished capacity? Would it or could it potentially put you out of business? Do you need to consider any ancillary issues with this investment? What are the additional costs to keep any new or old equipment running? Do you have the staff to properly use, oversee, and take care of this new equipment that you could potentially be purchasing? What happens if the new machine completely breaks? Do you have any recourse? Do you have a warranty? Is it backed up by the company that manufactured it? You're going to want to investigate all of these things before you decide to take out debt. You're going to want to find that balance of safety and growth potential that's appropriate for your business. So, how do you feel about risk in a downturn? Do you run stress tests on your business? Do you know how long it could last? What's your contingency plan for a sudden or unexpected event? Do you have any options available to raise additional capital? Any rainy day plans or rainy day funds? Do you plan on creating a safety net or an emergency fund? We've just been through an interesting time with COVID, but one thing's for certain: we can all learn how to better position our businesses into the future to potentially take advantage of leverage or weather any type of economic issues that could arise. So, one thing you can always do is keep accurate financial records. Work on your business and personal credit score, and then leverage your relationships. When you're going through the balance of safety and growth potential for your business, look for what's around you and make sure that you keep accurate records. But always be forward-looking. Keep in mind, once you're highly leveraged, it's going to be difficult to find additional money, and markets and debt can change rapidly. So what are some of the pros of financial leverage? Well, financial leverage, as you know, can be a powerful tool. It allows a company to earn income from assets that they otherwise may not have had the ability to afford. It multiplies the value of each dollar invested, and over the long term, it can help business owners create the future of their dreams. You can get started with financial leverage with a relatively small upfront investment. You're using this small upfront investment to control an asset that can have a considerably higher value. This kind of leverage also helps businesses get started or pivot and move in another direction. It can be the genesis of a new business venture, one on hand, or an expansion of the already production capabilities of your existing business. Good leverage can expand the amount and quality of services a company can offer to its customers. Plus, financial leverage can help companies grow in excess of what they could normally afford to. This could create exponential growth that wouldn't normally be available to companies who operate with little or no debt. So it's worth considering. Now, what are some of the cons of financial leverage? Well, it is possible for financial leverage to amplify losses. So you should make sure that you've got a realistic idea of your company's obligation under the additional debt that you choose to take on. If things head south, leverage can amplify losses, so consider thinking about ways you can handle short to medium-term market fluctuations. Also, financed assets could potentially decline rapidly. Do you have a plan in place to handle this possibility? Are you set up in a way to recover from a rapid decline? Leverage can be abused and combined in a way that could eventually drive a once thriving business out of business. Some additional risks present with leverage are present for businesses with low barriers to entry. If you're operating in an industry with a low barrier to entry, then it could be easy for competition to pop up and then compete in your space. If this business start takes market share from you and performs better than you do, it could eventually run your business into the ground. Higher risks are also present for companies with cyclical cycles. If the cycle is interrupted, it can lead to a chain reaction that can make it very difficult for a company to remain afloat. But keep in mind, don't let these negative aspects of financial leverage completely color how you view taking certain opportunities. Use these as guidelines or gut checks to help expand your planning and preparedness to build your ideal future. So, where can we go from here to get some of this money? So finding the money, here's some of the basics, and we'll go through these pretty quickly. If you have any in-depth questions about this, just book an appointment with us. We'll go over them with any of our clients. Traditional lending. We'll talk about this for a few moments. It's using your local, regional, and national bank. This option for leverage has been around for a long time. And if you have a current relationship with a local bank, we always recommend using that relationship. Go talk to a banker, pick their brain. If you're looking to finance a new business venture, you're going to need to demonstrate capacity to take on this new venture and the debt that comes with it. You'll need to formalize your request by completing the application process. Now, this could potentially take a little bit longer than some other forms of financing, and I've seen online that some say that you should plan around spending about 33 hours pulling together all your documentation, writing business plans, pretty much a full work week, at least in Europe. Now, much of this time is going to be spent pulling together additional paperwork and documentation, and there's no way to make this any faster unless you're prepared and you have everything pulled together in advance. The bank's going to take a look at your credit history and your score, among other determining factors. And they'll use this to go through the process and underwrite to decide if they're going to offer you money. They can offer loan amounts, then they can offer larger loan amounts than some other forms of more non-traditional financing that we'll talk about soon. But they do require very specific and high-value collateral most often. Now, when possible, we recommend using a local bank that you already have a good working relationship with. Use a person that your business can learn with and grow with over time. Make sure that you have a local banker on your team. You can also look for network and community lending. Look for money in your personal network or that's out in the community. Here at the Small Business Development Center, we actually run several loan programs to help businesses in our area. We've utilized some of these programs for many years, and we're also able to step into a deal, partner with a bank, and help get some deals done. However, some of these programs we run directly with the business owner. One of the programs that we typically run directly with the business owner is our microloan program. Now, under this program, it's smaller loans, $5,000 and less, and it's for new businesses that have been in business 3 years or less with minimal number of employees. The city revolving loan funds are typically larger. We typically partner with a bank to do these larger deals, and they have to be within the geographic location of the city limits. The county loan program operates similarly to the city loan program, except it's allowed to operate outside of the city in Clark County. We also operate a child care revolving loan fund. This child care loan fund is specific to Type A or Type B child care facilities, loans of up to $25,000 to help them grow, expand, or survive during this time of COVID. You can also look towards family and friends. Tap into that network. Now, some are hesitant to use this resource, so be careful. You don't want to inflict any damage that you may have to live with long term for friends and family. But also, don't underestimate what you may uncover in this space. It is possible to use friends and family as resources to cobble together enough money to start and grow a new business. You could even gain enough traction to be able to seek other forms of financing. Now, in this space, make sure that everyone's interests are protected and that you set out a realistic goal or plan to repay the money at a reasonable interest rate for a reasonable amount of time. You can also look to nonprofit lenders. In certain circumstances, it can be beneficial to seek funding from nonprofit lenders. The source of financing can be good for startup businesses and micro businesses. Oftentimes in the nonprofit space, the loan amounts are relatively small, and in certain instances, you may need to tap your own friend network when seeking these types of funds. Since this is the case, it's important to have a business that the community could start to orientate towards. It needs to be something people can get behind and feel good about contributing to. In addition to capital, these lenders at times offer other programs with funding, classes on how to run a business, how to start a business. These can range from mentorship to basic business skill building classes. The education can be very beneficial to many businesses. Since these loan amounts are smaller, they're not suitable for many projects, but they do have their place in this non-traditional lending space. They can even make capital available to businesses who have limited other options. Some examples are Kiva, Zip, and in our SBDC network, we have an office over in Columbus who works very closely with Kiva. Crowdfunding. So crowdfunding is another way that you can seek financing. And under this approach, you have a few options. Using the donation approach, you're looking for groups of people that donate to your cause. This works well for certain kinds of businesses and works well if your business has a large following or strong ties to the community. The business using this method can leverage these ties to ask for money to expand or start a new product line or achieve some other goals. Other businesses can use a purchase-based approach when crowdfunding. And in this instance, you're basically pre-selling product to early adopters. I've seen this approach used in a variety of products and have seriously considered taking advantage of a few offerings that I have found. A while back, I saw an offering for a compact-sized window AC unit. It was so small it could slide under a bed for easy storage. This product had such a following, it raised several $100,000 pre-selling these units and still had more room to run. Crowdfunding gets a new business or a business idea out in front of potential investors quickly, and it's possible to find large sums of money from angel investors that invest as a group or accredited investment guidelines would apply. This kind of financing with crowdfunding is available to individuals with limited funds and oftentimes has less stringent credit requirements. For a new business idea, this process can help with market validation. Not all projects are funded, keep in mind, and it does take a lot of time and energy to promote. You have likely heard of some of these websites: Indiegogo, Kickstarter, and Rocket Hub. Invoice financing. It is a possibility for some businesses, and invoice financing can quickly provide cash. For an example, let's say a company has $70,000 in receivables and they need $20,000 short-term working capital. They could use this type of financing to raise the cash needed quickly. The borrowed amounts are typically paid back quickly as well. This kind of financing typically works best for larger companies and companies that have an established track record and history. You can also look to online business loans. It's a relatively newer source of financing, and you could potentially receive a faster approval than from a bank. The loans can be funded quickly too, and something you need to be aware of oftentimes is the easier it is to get the money, the more expensive it could be in most cases. You could find some cheap money online, but always be cautious of interest rates. It can be very high. And you'll need to spend some time assessing if the interest rate cost of the capital is going to be right to fit your needs. Some of these short-term loans can have high rates, which could force a borrower to end up paying many interest payments back or a high interest payment back. So let's take a look at $10,000. $10,000 loan. Option 1 has a 6-month term with an interest rate of 67.5%. Now, option 2 is a 4-year term with a 22.5% interest rate. Now, in the first example, because the term's so much shorter, at 6 months, even though it has a 67% interest rate, the total cost of interest is $1,500. Your payments are going to be higher, but maybe that fits your situation. The total cost of interest for the 4-year term at a lower interest rate is $4,800. Your payments will be lower, but you pay much more in interest over time. Another place that you can go to are loan matching sites. Loan matching sites have popped up recently, and some have been around for quite a while. Now, these loan matching sites in the business space are a lot like mortgage matching sites on the personal space. To get started in the world of online financial leverage, you could check out some of these sites. This space has seen rapid growth, and many options exist for businesses of all size and industry to take advantage of various options. The process typically begins by filling out a profile for one of these sites and entering or uploading their requested information. These sites are free to use typically, and they make money from referral fees paid by lenders from matching up business owners with banks and lending institutions. This could be a good way to quickly get your business out in front of various lenders extremely fast. Although this is not a perfect system, the site will already filter out many of the lenders that aren't a good match for your needs. Now, these sites could potentially uncover a lending partner that you might not have found on your own, and they might not be local. After you are set and have been presented with offers on one of these sites, you would still have to go through the underwriting and application process to meet the lender's requirements. So, be on the lookout for loan matching sites that pair you with another loan broker, because if that happens, it could potentially add a few more unnecessary steps in being able to select a lender. Some examples of these type of sites include NAV, SBA Link, or Lendio. Some of these sites are working on other cash flow management tools and small business tools to help your business so they can have a longer pre-existing relationship, start to learn about your average daily bank balances, cash flow situation, revenue generation, things like that. So in the future, when somebody could potentially need a loan, they could help them out quite rapidly. So with all of these different options out there to potentially raise capital, find money, what path's right for your business? Well, it depends. It's going to be different for everybody. So any business owner should start out by answering these few questions. What do you need the money for? Are you planning to implement a new marketing strategy? Do you need to update or remodel your shop or buy equipment? What about starting a new business? Is that why you need the money? Are you planning on hiring employees? There are many reasons that you could be in the market for financing. So you want to make sure that for the purposes of needing the money, match the type of financing that you're searching for. Some might ask, well, how do I figure out how much do I need? Well, we know one thing, as much as you can get isn't the right answer here. There is a way, and we can walk you through the process of figuring out how much capital you should take out to infuse your business for growth or any sort of steady upward trajectory. The more specifically you can answer the question of how much money do I need and those other questions, the better grasp you're going to have on the direction that receiving that money will take your business in. So, starting today, you can begin to evaluate what types of financing you could qualify for while you're evaluating your credit score, time in business, and other factors that lenders consider. What type of financing is best for your business, and what information do you need to get together and pull together to prepare to potentially apply? Before we end here, I wanted to briefly cover some of the COVID information that we've had from the past. Now, we all know that some of these programs from the new CARES Act still aren't open yet, but it's important to take a look at everything that's been offered towards small businesses. And this list is not inclusive of everything that's been out there. But from a federal level, most of these programs were at one time available for small businesses. If you have any questions about some of these programs, not all are still active, don't hesitate to give us a call. We'd be happy to help you with any of the PPP loan forgiveness, EIDL loans, or any of those other options. If you have any additional questions, don't hesitate to reach out to us here at the Small Business Development Center in Springfield. Feel free to give us a call, check out our website, or email me directly. Have a good day.